It's always a great conference when people are sort of chit-chatting at the panel session also. So congrats, Rajat. Full house. So I'm going to start here because I know that my colleagues on the panel have a bunch of stuff. In fact, DK, I think, is talking at 3 different events today. And that just tells you about the geopolitical scenario that we are facing. So I'm going to kickstart. Rajat, maybe you can get them to shut the doors. Yeah, if we can just shut the doors at the back. Okay, here goes. I'll just scream louder than I normally do. So India is said to be the fastest growing economy over the next decade, building on its strong growth momentum. But we are at a very tricky juncture. So just to remind us all of history, if anyone remembers the Smoot-Hawley Tariff Act of 1930, which resulted in protectionist measures, slashed global trade by 60%, and what followed was the Great Depression. So I don't want to start on an ominous note, but most recently Trump's tariffs on China has already wiped out billions in market value, disrupted supply chains, and redirected manufacturing hubs. So DK, I'm going to start with you. With Trump imposing aggressive tariffs, do you believe that India is somehow benefited from this shift? Are we also at the risk of getting caught in the crossfire? What are the opportunities and challenges that we should navigate? Should we be terrified of history repeating itself?
Well, first of all, there are no winners in this game. So I think I don't see anybody benefiting. So overall welfare is going to go down because of this. But let me also say that the tariff war and insular policy is not happening just now. I think it started off after the pandemic, where the countries started focusing more on the resilience and less on the efficiency aspect. Now I think what we are seeing is that those policies are on steroids, particularly the tariff policy. So I think the impact of that is, as I said, is going to be welfare reducing. And here I think, let me point out that the first thing that gets impacted is the trade. The trade gets rejigged. The supply chains, which have been established for a very long time, I think they also get disrupted. And I think beyond that, the productivity or the welfare suffers. And we're already seeing that the immediate impact of that is unsettling of the markets. And I think the rupee has been weakening. I think all that has to do with what's happening, what Mr. Trump is announcing on a daily basis. We're still not sure whether this is going to be a strategy or is actually going to be the tariffs are going to be implemented. It could be a strategy to get a better deal. So I think that is creating a lot of uncertainty in the minds of people. And uncertainty is bad for decision making, whether it is investments or it is any other decision that you want to make. So I think as far as now coming back to India, I think as far as India is concerned, there is a direct impact and there is an indirect impact, because when tariff wars happen, even let's say between China and US, I think the collateral damage takes place for other countries which are not a part of that. And here I think the indirect impact is, let's imagine a scenario, I think, where US is imposing a tariff on China. We've done this simulation, and the average tariff goes up from 14% to 25%. What happens is US inflation goes up, the growth is not impacted that much, but in China, inflation will go down and their growth will go down because the one engine that is firing their growth is exports right now. So in this scenario, you'll have implications for monetary policy. The US interest rates will not fall, they might actually go up, and that might lead to outflow of capital from emerging markets, right, like India. And then I think these Chinese goods will become cheaper and they might flood the Asian countries, including India, with very cheap, exports to these countries. So that is one indirect impact that plays out. Now coming to the direct impact, why India is in the eye of the storm is because one, it runs a trade surplus with the US. So I think that is what, it starts flashing red in Mr. Trump's heat map. And the other is that on the average, India is levying a higher tariff rate on US products than US is levying on India. So these two things combined make it a case for rejigging of tariffs. And here I think we have already seen there is a speculation that 25% duty will be levied on cement, on aluminum and steel. And we've already seen how the players in this game are already getting impacted. I mean, the prices are getting hit, the stock prices, so to say. Now, I think if you move from that, away from that, the items which are in the firing line, I think it's the textiles, footwear, electronics, automobiles. I think all these things, you might see lower tariffs on them being imposed. Already, I think India has started that, but you might see those items becoming cheaper for us. And if US tariff goes up, then I think the exports are going to be a little tougher. So a lot of rejigging will happen. In this environment, I think India has to fire its domestic engines of growth. And here, I think the budget is giving some stimulus to consumption. The monetary policy started easing, so that might also be helpful. But more than that, I think what the government needs to do is to ensure that whatever it has committed on the capital expenditure side, they actually deliver. In the last two budgets, we've seen that they've fallen short of what they have committed in the budget. So making the project shovel ready and all these things become extremely important, I think, right now. So that is one engine, I think, which is in our hands to be fired. Second is, I think government has made a very big promise, which is deregulation of the economy, decriminalization of laws. If you activate them, then private investment will come forth. So I think these are the few drivers that we have.
So DK, I think there were a lot of nuggets in there, and it was really fascinating. I'm going to pull out a couple of threads and dig a little deeper. I think one of the things you talked about, and you mentioned it tangentially, was, let's say interest rates may actually go up in the US. Let us say that China starts producing goods. If you look at GDP growth over the last decades in the countries that have prospered, it all comes down to the magic word of productivity, right? And let's say that, let's play out the scenario of China producing much cheaper. I think what you didn't say was almost as interesting as what you said. You talked about China then dumping its goods everywhere, almost disregarding this China plus one, right? Can you delve a little bit deeper into that? How much of a threat is that? Is China plus one real? Is that just something people talk about, but in reality, it's just about cost and productivity?
Well, I think the way it has played out is that when US started imposing tariffs on China, China was very smart. I think it started moving to the countries from where it could export back to the US. So now I think the worry is that US might start looking under the hood of the stuff that is being produced. I think a washing machine, maybe the parts are coming from China, so they'll become, so I think that is the next level of tariff action that might take place. As far as China plus one is concerned, I think China has, I think, a lot of spare capacity in its economy. And it doesn't, and I think it has recovered the cost, the fixed costs, so to say, of those investments. So it's happy just producing them and selling even if they don't get a very good price because the variable costs are covered. So I think that is why many countries in Asia would be worried that I think you will see a dumping of products. And you can't fight against that because the prices in China are coming down because the growth is coming down. So it's a pretty complicated scenario.
Speaking of China, Mohanjit, I'm going to bring you in here because you are the tech expert. And I think what's been very ironic in the last few weeks was you look at all the big tech companies in the US spending billions and billions on AI. And then you have an upstart in China that says, hey, I can do it faster. Oh, by the way, oops, I just spent 5 million, right? So I'd love your perspective on what's going on. And then I'd love you to compare what's happening globally to what's happening in India. So if you look at Indian tech, and a lot of the GPs have made money by picking the right horse at the right time. So the right time in the 80s was, IT taking off. You then had 90s, you had telecom. Then you had the BPOs. Now everyone's talking about AI, right? And every GP in town is looking at dozens of AI proposals, right? What's your view on what's going on? How should we be thinking about the tech landscape in India amidst this, evolving sort of geopolitical scenario?
Yeah, this is it's a brilliant question or a set of questions. So look, the DeepSeek moment, right? I think Marc Andreessen said this. It's a Sputnik moment for the US. So when you can actually cut the cost of compute down by not 1 order or 2 orders, 3 orders of magnitude, right? What does that actually do? Now, obviously, there are all sorts of issues around data leaking back to China, and therefore there's some pressure, and Mr. Altman and Musk, that entire bromance going on around Stargate, and His Highness Mr. Trump sort of throwing $500 billion towards that momentum. So obviously there is, going back to DK's points, there's this sort of geopolitical shift around power that's going on, leveraging underlying AI. Now, to answer your question more specifically, I think if Indian entrepreneurs and therefore Indian GPs do their job really well, I think this could actually turn into a positive inflection for India. Both entrepreneurs who are building, let's say they're private limited companies sitting here building for India and the region, or they may be US entities, but started by Indian entrepreneurs that are building products from India, from Chennai, Bangalore, Pune, Bhubaneswar, etc., but selling globally, because most of them sit at what we refer to as the application layer, right? So billions or hundreds of billions potentially eventually will go into foundational models, and physical sort of infrastructure, the semiconductor, whether it's the edge or data center. But the benefit, just like happened with the hyperscalers, Amazon, Microsoft, GCP, the benefit actually accrued in large part to companies that were building on top of that. So if the cost of building software and cost of leveraging AI, and whether it's agentic or whatever comes next, actually continues to go down, not linearly, but actually exponentially, that can have a massive inflection for Indian entrepreneurs. And we're seeing that, by the way, within our own portfolio. So every single company in the portfolio, you can look at it as a positive or negative, has actually either maintained headcount or reduced headcount over the last couple of years, while tripling or quadrupling their revenue. Now, how has that happened? That has happened because AI has sort of generated these sort of productivity and efficiency gains that were unanticipated. And now if you layer on top of that the cost of compute, because a lot of that goes, by the way, for computation, if that continues to go down, I think the margin expansion is a real possibility. So I see that as a net positive, for Indian entrepreneurship. But, nothing has rattled sort of the Silicon Valley, echo chamber quite like the DeepSeek moment of 200 very smart Chinese individuals who overnight created a sensation. So I'll just pause there.
Fascinating, Mohanjit. What about the challenges? what do you see? Because it is a very interesting overall backdrop, right? And that's the topic of the panel. We're sitting in a geopolitical scenario, which at best, so it's almost like you have to wake up every day and think of an upside scenario and a downside scenario. We almost don't live in a base case anymore, right? Upside, hopefully, this is all, to bring in DK's point, this is all hogwash. Maybe the tariffs won't happen. Maybe it's just posturing. Maybe they will happen. Maybe they will. And, the last time it happened, it didn't fare so well for the world. Against that, we've got a massive disruption happening, on AI at a scale that's astonishing. And that is, in some ways, to bring in an analogy, it's almost like having a flat escalator, right, that you're walking on. And then you have all the other AI companies sort of benefiting from that. What are the challenges that we anticipate in India or globally with the China threat that DK mentioned?
So I would say that, look, every company, I think Neha made this point on the previous panel, she said every company is a tech company. I would say, yes, every company is now an AI company, whether you're building it, leveraging it, using it in some way, shape, or form. So if you are not actually leveraging, if you're not getting ahead of this massive wave, right, you're going to be left behind and there's going to be collateral damage, right? If you somehow think that the old way of doing business, you know what, we've got hooks in the enterprise customers or hooks in whatever your customer base needs to be, you need to actually go ahead and rethink it. If you don't, thank you. If you don't, you will be obsolete. So that's one. So what I predict, which is what happens with every single curve jump, technology curve jump that happens, there will be winners and there will be losers. There's going to be a lot of Pac-Man kind of M&A consolidation that goes on. So within even, again, our relatively small portfolio, every single company is now in the middle of conversations around acquiring who used to be their competition, right? So whether it's a tuck-in, whether it's a merger of equals, things like that are going to end up happening. I think scale is going to play a massive role. Right, so you can, what ends up happening, for example, a lot of the SaaS companies sort of get to 3 million, 5 million, 10 million, maybe dhakka, they can get to about 20 million, they stall. It's very hard to break through that 20 million and eventually get to the psychological 100 million ARR threshold, right? And so I think you actually have a bunch of those companies today, both in India and in the US. Now, India actually has a benefit from the standpoint of, again, the previous panel talked about a robust public market, right? IPOs are happening, tech IPOs are happening. You get to 1,000 crore to 1,500 crores, you actually have a path to liquidity. That is not the case in the US. US suffers from two major dilemmas. One, during the ZERP time, when money was free, companies raised money at basically there was no cost of capital, right? Growth at any cost. And those valuations are now getting cut by 30, 40, 50, 60, 70%. And that creates a lot of GP, LP tension. It creates a lot of GP entrepreneurial tension. So there is that rut that many of the so-called high-flying companies from 21 and early 22 are dealing with today. Second, to go public on the NASDAQ, you now need to be 350, 400, close to 500 million in ARR. Right, and be profitable or line of sight to profitability. To get to that scale and therefore have an exit, it's just going to take a long time.
I think that's one way of telling us we're running out of time. This is a conversation that can go on forever, but I'm going to wrap it up with just a quick summary on opportunities. I think, Mohanjeet, you articulated this very well. There's almost like a underlying tsunami that is happening where you have lots of beneficiaries on the tech side. But you brought in lots of words of caution, DK, about the overall environment, the tariff scenario, China dumping. I think one of the points that I would also like to leave the audience with is that over the past decade, private equity players have collectively realized, let's say, $190 billion in exits from India, out of which 120 billion has come in the last 5 years. So the exit scenario has certainly improved a lot. And what's really interesting is to see a lot of the tech companies moving back and doing reverse flipping. right? So even in, a few years ago when you were investing in tech companies, all they wanted to do was to build a little bit of scale, get out of India, move their domicile to Singapore and then the US. That was the dream. And it's very interesting to see sort of the reverse flip now. DK, any quick points on that? And then Mohanjeet, and we'll wrap up.
Well, I think very quickly, India, the growth path is, I think we've already have a track record of high growth. We've grown at 6% plus per annum for last 30 years. I think the issue is how far can we go ahead, I think, and what Mohanjeet was saying, the productivity or the angle to that, a lot of productivity is going to come in India from digitalization. And I think combined with better physical infrastructure, it will allow us to combine capital and labor more effectively. So productivity is like a magic, I mean. So that is what is going to drive India's growth.
Mohanjeet, any last words on this?
Yeah, 3 quick bullet points. One, India's population growing from 1.4 to 1.7 billion in 25 years. Think about what opportunities that creates and challenges. We've got to keep these people employed. Second, services export. 340 billion in fiscal 24 was exported. Over half of that was IT. I think that is actually going to escalate. And third, energy. Every company being an AI company, it has to, if you think about AI, it's data, which I call data, it's God, compute, right? Data and compute. And so everything that you do, if it leverages AI, you are an energy company. So we have to figure out how India cannot have 20 of the 30 most polluted cities in the world and things of that nature. I think that is a core aspect for everything that we do because it's going to leverage AI, which requires clean energy.
DK, any last words on what we should worry about in this new world?
Well, I think there are a lot to worry about. I think India has some challenges which no developing country in its initial phases faced. One is climate, and the other is geopolitics. The world was opening up when China was growing, when Japan was growing, when Korea was growing. It's closing now. So how do you swim against the tide via very deft policy making, foreign policy also involved? How do you do that? I think that's a major challenge. Climate, I think, is hitting us not only from the point of view that we have to transition towards greener energy, which is costly, but also from the fact that it is hitting you on a regular basis. Just to wrap it up, India's central bank could not cut rates for 24 months just because I would say the climate had a large role to play because food inflation was high, and food inflation was high because the climatic shifts kept the prices of vegetables, prices of other food items high. So it is also coming in the way of central bank cutting rates. I mean, so it is, and also I think influencing us in many other ways. So green transition and also ensuring that we adapt to the changing climate. I think these are the 2 big challenges from the climate side.
I think if I summarized the panel, and it was fascinating for me because you have an expert on the macro geopolitical side with someone who's really smart on the tech side. And really, if I were to look at the next 5 or 10 years, those are exactly the aspects that we should all be thinking about. What's the macro? Where's the tide? Digitization and productivity. So thank you. Thank you, gentlemen. That was really interesting. Thank you.